Hi everyone, hope that you guys can hear me. If you can, you could just give a thumbs up or make a comment in the video so that I can make sure everybody is on board and hearing me. Give everyone a few minutes to log in, to share, to get acquainted onto this live stream. Not seeing anybody on the stream as yet. I'm not sure if it is working. I'm not seeing my. There we go. Okay. So it would seem as though I cannot see your comments from this operation that I've set up so that I can do the split screen, but I can see you on my phone. So I'll be toggling back and forth. Now give persons a chance. I cannot see your comments from. There we go. Cool. We are on board. I can see you guys now. Thank God for technology. So let me do that little setup here so that I can see your comments coming in, because I would like this to be an interactive session. Great. Cool. So let me start over. Good morning to everybody who's joining in. If this is your first time doing a live stream with me, welcome. And for those who are regular persons, I am happy to have you back. And I know it's been a while since I've done a live, but I have still been trying through CBC's Morning Barbados sessions every morning, my YouTube channel, all of the other things that I've been involved with to try to share as much with the public. But as you can imagine, doing that with a full-time job, it gets a little difficult to still be doing a lot of lives. But I thought it was important that for those who would like to be able to keep up with their learning during this time of crisis, that I could take an hour of my week to be able to make sure that when all of the dust settles and we go into our new normal, whatever that may be, that at least this area you will not be behind in. So I thank you for trusting me, because I'm not a BIMAP instructor, making that clear, but I am a chartered professional accountant and a certified internal auditor, and I am a volunteer with the Institute of Chartered Accountants of Barbados. So I'm not just some person that just decided to pick up and share pop-down knowledge. I am hopefully informed enough to teach a beginner's accounting course, and I hope that you do enjoy it. As I said, if you do have any questions throughout the session though, feel free to drop a comment. If you are very shy, you can send through Messenger, but because most of us may not be connected and may not see it immediately or directly, so it would be best to put your questions in the comment section. So without further ado, let me start the session. And bear in mind, I do not own these materials, so I cannot share them. We will see what happens once everything settles, as I said again, in terms of you going back to your BIMAP instructor, because I cannot certify anybody. You can't go to any workplace and say you went to the class with Crystal Howell. Not going to work. So you still need to go to BIMAP. You still need to go through CXC or CAPE or whichever area or field you're studying in to become certified. But hopefully you pass the exam a lot easier. So why should anybody want to study accounts? Accounts is something that almost every time I hear someone bring it up is almost like mentioning that you're a common. The look on people's faces is just this apprehension and fear, and it's not always a positive feeling you get when you hear persons mention learning about accounts. They're happy to have an accountant, as they're happy to have common around them, but they're not always happy to learn about accounting. So we're going to try to get you into understanding why it's important, even if you're not going to go into a career, why it's still important to understand some kind of basic level of accounting, because it's useful not just for if you want to have a small business, but if life in general. As a person who is managing a home on a much smaller scale, you still need to understand some very basics about the revenue that you're making, the income, the expenses that you have, long-term planning. All of that accounts can help you with. So even if you're not going to make a career out of it, you should still understand some basics. So there are going to be a lot of terms, and we as accountants have to acknowledge that we use a lot of terms that a lot of persons may not understand, and you are going to have to pick them up. The same way that you learn what throwing ones means, and if you don't know, you're a good person. But the same way we learn a lot of other lingo and terms and everything else, with accounts, you're going to have to do that as well. But hopefully I can help you to understand what those terms mean in as basic a way as possible. So we have a lot of things called financial statements, and these financial statements will basically help you to be able to see what the big picture is. So the three main ones that people use would be the income statement, the balance sheet, or new fancy term for it is the statement of financial position, but a lot of persons will still know what you're talking about if you say balance sheet, and the statement of cash flows. Let's go from the beginning. The income statement, as it sounds, is very straightforward. You basically show all the money you make, we call that revenue, and then you show all the money you lose, your expenses. So you have your salary, or you have, as I use on CBC all the time, you have your fish and chip shop. I don't know why I use that example because that's like a tongue twister, but you're selling chicken and chips. And the money you make from selling your chicken and chips, that's your revenue. And all of the expenses that you incur, which would include buying potatoes, buying chicken, the gas you have to spend driving up and down to go and buy these supplies, the oil that you will use to cook your chicken and chips, all of that will be your expenses. At the end of the day, you're either going to have a profit or a loss. So your income statement is the one that is going to show you what that looks like. The next statement that we would have is called the statement of financial position, or the balance sheet. And what that looks at, your assets, your liabilities, and your capital. And we're going to explain what each of those things mean. If at any point, again, I'll reiterate this periodically, but if at any point I'm going to quickly for you, you can raise your hand, you can ask a question. I'm monitoring on my screen so that you can not feel as though you're being left behind. This is not the time to be left behind. Seeing a lot of people on here that know about accounts. So if you know and I'm going too slow for you, I'm left you out. That goes for people like Ken Wynn and everybody else that I know are bona fide accountants. So back to our balance sheet. An asset is anything that would add value to your home or your business. So we have them divided into short-term assets and long-term assets. And all short-term means is that it's going to be of value to you for a year, and anything long-term is more than a year. So if you have cash on hand is usually considered one of the most liquid, or the asset that would go away the fastest, and that is what we would consider the most liquid asset, because nothing converts faster to cash than cash. You also will have, using our chicken and chips example again, you could have inventory. Your chicken and chips inventory could be the actual chicken, the spices, the oil, whatever it is that helps you to turn that inventory into something you can sell. That would be considered your inventory. That's also an asset. We also consider persons who owe you money to be an asset. We call that accounts receivable. So if you have a customer and the customer didn't have $10 on them to pay you right away, you will make a little note and say that John Brown owes you $10, and that's considered an asset, because at some point you would expect within a year's time, hopefully sooner than that, that John Brown is going to pay you, and that becomes money. So you now understand the short-term assets. We're going to go into the long-term assets. Long-term is anything, as I said, that will last longer than a year. So the vehicle that you have that is going to last, let's hope it lasts at least 10 years, hopefully longer. That is a long-term asset, because it's going to help your business or be an asset to your business for more than 1 year. So anything along those lines will be considered assets. Now, we have the next side of the balance sheet. And when it comes to balance sheets, we have to remember the basic formula, which will always hold true. Assets will always equal to your liabilities and your equity. So now we're going to explain the liabilities and equity. Liabilities is anything that is really going to truly pop your neck. So you have persons that you owe. So maybe you have a deal with PriceSmart, and you would have bought inventory from them, whether it be chicken or whatever the case may be, and you didn't have the cash right away. So you asked them for a little credit. At some point in time, you're going to have to pay them, hopefully in less than a year's time. And that makes it a short-term liability. So anything that's going to cause you to lose money in the future is a liability. A long-term liability could be a loan. So the same vehicle that you have, unless you're really making some good money, that loan is going to last longer than a year. So that's a long-term liability. When it comes to equity now, equity is what you would have started your business with. So whether it was money that you would have saved or that you have put down, or someone was kind enough to give you this money to start out your business, that is considered equity, and it is different to a loan. So the loans are treated as liabilities, equity is treated separately. So we have to remember, assets will always equal to your liabilities and your equity. And so that we can show a very simple example of that. If you started your business with $5,000 in savings, the asset will be cash of $5,000 and equity of $5,000. You're always going to have something on each side that will be equal. If it is not equal, it will not balance. This is why we call it the balance sheet. That is why I like accounts, because you will know right away if you are right or wrong. If you got $4,000 in cash and $5,000 in equity, something is missing. So you will have to do some investigation to find out where it is that you went wrong. So let's go through this, because I did not read all of these materials beforehand. So I am going through and explaining to you guys as I see them, because I was working the entire week. I did not have that kind of time, but I figured there shouldn't be anything in these materials that I can't explain to you guys. Well, looky here. They went through a whole example like what I did, but they called it lawn maintenance, which is so much easier than fish and chips to pronounce. So they're going through now a history of accounts and why we call things debits and credits and how it started 10,000 years ago. And I'm not sure many people be interested in the history of accounting, so I will skip that, why it's called a debit and credit, but I will explain what debit and credits are. Again, another term that accountants use all the time, which some persons may get confused by, but if you practice it enough, you will pick it up. So a debit, if you're speaking about assets or expenses, a debit means you've increased it. A credit for assets and expenses means that you've decreased it. So if you hear somebody say that they debited their cash account or they debited an expense account, that means they've increased it. So if I make $100 and I want to increase my cash account, it would mean that I would have debited my cash account by $100. So that $5,000 that I started off with has increased by $100. That's what it means. Now it's the opposite for anything that is revenue or liability and equity. So if you hear somebody say they debited a liability account or a revenue account, that means they've increased it. Sorry, debit for liability or for revenue means they decreased it. If they say they credited it, that means they increased it. So what I tell persons all the time when they are trying to get these things down pat, that they should have a little thing written down so that you have here, when you have your assets or you have your expenses, this is what it means for a debit and credit. If you have your revenue or your expense, your liabilities or your capital or your equity, capital and equity is an interchangeable term. This is what a debit and credit means. So that anytime you see a scenario, you will know if you are increasing it or decreasing it, because the terms can sometimes get you confused. Do not feel embarrassed, especially when you're in an exam situation, to write it down so that you will always be able to keep in mind, especially when you're under pressure, what the debit or the credit means when you're faced with a particular scenario. So I'll go through some definitions that they have here, and they're basically speaking about the substance and the purpose of accounting. Accounting is generally defined as the art, and like the fact that they use the word art, that's good, of recording, classifying, reporting, and interpreting financial data. Now, most of the basic part of accounting is going to be discussing the recording part, which we went through in very, very basic details, where you have your statements and you have your debits and your credits, and you know what that means for you. But we are going to also, within the weeks or however long this takes to come, get into what it means to classify, to report, and to interpret that data. Because I know for persons who are beginners, sometimes you get confused between what is an expense or what is a liability. At what point do I recognize it as this versus that, as an asset versus revenue? And it can get confusing. So we're going to make sure that we keep reiterating those, and you can review these videos so that you would be able to have down pat in your mind what the differences are in these things so you can classify them properly. Persons who are going to use accounting information. If you're in a business, one of the key persons that are going to use this financial information is management. They're going to need it so that they can analyze the company's performance and the position. So for your income statement, when you are managing your business, you must be interested as to whether your business is making a profit or a loss. That is basic information. So you, as a person in charge of your fish and chip shop, your painting endeavor, whatever business it is that you have, you must know whether your business is making a profit or loss. You also want to know how many assets you have, how many liabilities you have, who do you owe, how much do you owe them, how much of your equity that you started your business with is dwindling because you are actually making losses. Because every time you make a loss, you have to subtract that from your equity. And you will be able to see if your equity is increasing because your business is doing well or decreasing because your business is not thriving. So this is why it is important for persons, no matter how small your business is. In fact, the smaller your business is, the easier the financials are to maintain because you don't have a lot going on. As you get more and more complex, then you will have to get persons who are certified and know what they're doing to help you to manage that process. But if you have a very small business and you do not plan to stay small, you should be documenting this information. I cannot stress it enough. Your employees should be interested in your financial position, and there are a lot of businesses who don't want to share this information with employees, but as an employee, you should know whether the business you work for is performing well or not. It helps you in being able to understand whether your remuneration, how much you're getting paid, is fair, or if you have job security. That's just a reality. If the business that you're working for is making losses over a sustained period of time, how likely is it that you'd be able to stay employed with that company? And especially in circumstances like this that we're experiencing now, there are a lot of businesses that are struggling and they're not able to keep persons employed because of what we're facing. Employees who are aware of this can either do more to try to help make sure the business stays afloat because it helps give a sense of ownership as well too, especially if that business is fairly sharing the profits that they're making and have persons feeling as though they're invested, versus whether persons are in the dark and have absolutely no idea and they're just showing up to do their work. If you are an owner, and we'll get into this a bit later this is a part of a study where we have the principles of business, where you would discuss the types of businesses that you have. So you have some person who is a sole trader versus a partnership versus a limited liability company. All of these different types of companies would give an idea as to the kind of ownership that is going on. So if you have a fish and chips shop and you are the only person you're the chief cook and bottle washer, you're a sole trader. You are both manager, you are also the owner. But there are some entities where management and ownership is separate. So these persons who are the owners would hire persons to run the day-to-day going-ons of the business. That is why you will have a separate note here as to whether the information is for management versus an owner. So if you have shares in a company or you've invested in a company, what you are looking for is going to be different to what an employee looks for, a potential investor looks for, to what management is looking for. And we're going to also get into detail as to the different indicators that each class of person is going to be looking for to see if they're making a good return on their investment. So for example, you may even have some person who started a business, but they borrowed money from their mother. And their mother is a very strict person and wants to know that you're investing properly. So they may be looking at the kind of assets that you've been purchasing, if it makes sense for the business that you're running. So if you have chicken and chips and you bought a little 20-inch gas stove, they might be looking at you and wondering, what are you really investing the money in? Are you really serious about the business? How can you really make proper money when you are playing cheap with the money that they gave you, or you're using it for something else? Because she may have given you money to go and buy the latest in technology where stoves are concerned, and she's not seeing that money being spent on what she expected you to spend it on. So this is why different classes of persons are going to be looking for different things. Right? Now we have external users of accounting information. And this is, again, no matter how big or small your business is, this is still going to be very important because we're getting into business to grow, right? We don't want to stay small. So we want to make sure that this information is available for persons when they ask these questions, that you're able to give them the information that they need. So some of the external users would include creditors. Creditors are persons who are going to lend you money, whether it's for the short term or the long term. So Price Smart, if they're going to give you some credit, we know what we would have to do in general. Like anybody who's opened an account with courts or anybody knows the rigmarole that people put you through sometimes to be able to show that you are some person that they could trust to pay you back in whatever terms they would have established. It's no different for a business, or I should say, the bare minimum exists when you're a business. Because depending on how much money you want to borrow and for how long, they may ask for more requirements. So this is why sometimes when I have persons who come to me and they want to get money from a bank, for example, and they're frustrated because the bank is asking for things that they cannot now go and manufacture and get back to them in a week's time. This is why people get frustrated, because they have not been keeping proper records. So when they get to that point where they want to grow and they go to these avenues, they get knocked down. So hopefully this will help you to be able to understand why it's so important to maintain proper records. So they're going to want to make sure that you can pay back the money. So again, the financial statements that I've been mentioning, the income statement, the balance sheet, the cash flow statement, all of these things are going to help them to be able to look and see if you've been managing what you've had in the past properly, which would give them an idea that you will manage what they will give you properly so that you can pay them back. Tax authorities. And this one is a ticklish subject in Barbados because we have been getting some pushback in terms of asking Barbados Revenue Authority what the situation is going to be for persons who have filed and may need to have extensions or have questions or whatever the case may be. At this present point in time, BRA is saying that you still need to file and pay. I do not work at BRA, so if there's anybody who has ICAB, the Institute of Chartered Accountants of Barbados, has also been trying to work with them, and we understand the situation is not one where you can know for certain what the next best step is, but for those who can pay, please do. And for those who are wondering how they should proceed, as soon as we get any information available, we will share it with the public. ICAB has a Facebook page, an Instagram page, and updates have been placed there as often as we can. As soon as we get information, I also encourage you to go to BRA as your first point of contact, because ICAB is only sharing what we get from BRA. That segue aside, tax authorities are going to be interested in the information that you have. That is the entire basis for how they will be collecting their revenue from you. This information is usually based on your financial statements. This is why it needs to be accurate. If your information is inaccurate and you're filing a wrong amount that you would have to pay or that you would have to have refunded, that can cause problems later down the road, especially if you're audited, because then that comes with fines and penalties if you short paid your tax liability. So this is why it's very important for your financial statements to be accurate. Investors, we would have mentioned this previously a little bit, but if you have a business, you started off with, let's say you found 5 persons who decided to give you money to start your business, and you realize as time goes on, you need more money to be able to either grow or to sustain your business. You are going to want to attract potential investors, and you do this by showing them your financial statements. Again, similar to creditors, persons are going to want to see that you have been doing a good job with what you've had so far. They're going to want to see the plans that you have. This is why sometimes accounting is seen as an art, because you're not just putting numbers down on paper. You have to also be able to show in a convincing way why these numbers mean that persons should be able to trust that you know what you are doing. So if you have another 5 persons that you would love for them to go and drop another 500, 10,000, any amount into your business, if you do not have any kind of financial statements, unless you're a really good sweet talker, it's going to be hard to convince the average person that they should invest in your business. Customers. Now, I know a lot of customers might not necessarily be interested in financial statements for most of the businesses that they patronize, but some customers are going to be interested in knowing if your business is doing well or not. I'm going to skip past that one for a little bit, but I mean, realistically speaking, if you have, like, I have this example. I was, during this entire crisis, you're looking for persons who would have been able to deliver certain goods to you. And it lends a certain bit of reliability if you know that this person has a business that will last for the long run. I have another good example that I now remembered, so I'll share that with you after. But if you're relying on this person to be delivering food to you, and then all of a sudden the business folds up, you are now, as a customer, going to be forced to find somebody else and investigate and do that process all over again. And in the interim, you are left struggling. An even better example would be for like an insurance company. And disclaimer, I work for Sagicor, so this is why you might hear some tidbits or whatever dropped where Sagicor is concerned. But if you have a policy with an insurance company, whether it be for health insurance, whatever it is, mutual funds, whatever you've decided to get a policy in, you're going to want to know that the company that you have a policy with is going to be able to honor your claims if you ever do run into trouble. So if you as a customer do not investigate whether this company is financially viable in the long term, then you may run into trouble when it comes time for claims, especially when you have times like this where so many people may be claiming, or during hurricane season where a great number of persons may be claiming at the same time. You want to be with a company that you feel comfortable that if something like that happens, you are going to have your particular claim honored. And for some companies, their information is available. So for Sagicor, for instance, if you wanted to, you can go online and look at our financial statements, and you'll be able to see for yourself whether this company has a strong background or not. So it's not just some person coming and trying to sell to you that this company is strong and better than this one or that one or the third. You can do your own homework and be able to investigate whether this company does have a stronger financial position than somebody else. So when it comes to products and services like that, this is where a customer may have to do some homework and be able to investigate whether that company has a strong financial position or not, so that you're not just taking the word of a salesperson who would, some of them, not all, but some of them are just interested in making sure that they get that sale so that they can get their bonus or their benefits. Next external user would be the regulatory authorities. And in my particular field, we have to deal with regulators all the time. So I know some people get frustrated when they go to a bank or any kind of financial institution, for example, and they decide that they want to withdraw or deposit $10,000 and they have to fill out a know your customer form. I know it's frustrating, but these are the things that regulators ask for. They also are very interested in your financial statements, and they need to be able to see that you are not doing anything underhanded and that you are running your business appropriately. So, we're going to get into the difference between accounting and bookkeeping. And this is important, especially for me, because I know a lot of persons think there is no difference. There is a difference. I have never, except for myself, done bookkeeping. I don't like bookkeeping. It is tedious and boring. But if you are a small business owner and you are the chief cook and bottle washer, you're also going to have to be the bookkeeper, the accountant, and sometimes even your own auditor. There's a difference between a bookkeeper, an accountant, and an auditor. We're not all the same. We may be able to do certain aspects or even explain certain aspects, but they're separate and different jobs. So, the bookkeeper, that name is kind of self explanatory. Bookkeeper keeps the books. Hey, ignore me. So, what we mean by keeping the books basically is the records that the company has. So for many persons who are small, your records might be those blue ledgers that you will see in Braden's that have all the things lined up all nice and neatly. Your records might be Excel. Your records may be QuickBooks or something very fancy to accommodate the type of business that you have. Regardless of what system you use, the act of recording whatever happens in your business, your transactions, your revenue, your expenses, your everything, that act of recording it is called bookkeeping. The accountant now is a person who will now organize the recording, the reporting, and analyzing. So we take the records that you have done and we put them into reports, and we use these reports to explain what is going on with business. And that is a separate skill altogether. The auditor now, which is what I am, and there are different types of auditors as well too, but I won't bore you guys with all of that. The auditor is the person who makes sure all of this was done properly. So there are times where persons will make errors, they will make mistakes, or they will deliberately be trying to mislead what is going on because they want their investors to think that this business is top notch. They want creditors to lend them more money. And you can understand why people would then be motivated to do certain things to make their records look a certain way. This is why auditors are important to make sure that all external users can feel comfortable that what is reported is accurate. Yeah, it got a whole section in here on the role of accountants in Barbados. I tell you. Accountants are apparently an in-demand job. Also, ICAB does also share when there are accounting job opportunities on their channels. So anybody who is an accountant, if you're not a member of ICAB, I do encourage you to join. If you have any questions or queries, you can go on their website or you can contact any of the lovely ladies who work there to find out more information about what ICAB can do for you and the benefits of being a member of ICAB. So now we're going to go into some more details about the balance sheet. We have about 20 minutes left, so if anybody has any questions, remember I am monitoring and you can stop me at any time to go over anything. And if you have any questions afterwards, I will give some time to review any questions that persons may have, because I understand everybody may not feel bold enough to be able to ask questions in a public forum. That is quite fine as well. So the next 20 minutes, we'll see how far we get through. I'm still on module 1. So you can see that we'll be here for a bit. The purpose of the balance sheet is to show the financial of a business enterprise at a specific date. No, a balance sheet is always as at a particular period. So if your business's year end is December 31st, then this is showing what state you are in as at December 31st. So if your bank account had in $5,000 at December 31st, that is what you're going to record, not the $10,000 you have in April, June, whenever. It is what money you would have had as at December 31st. Okay? So I am going to pull over an illustration so that you can see, have an idea of what a balance sheet looks like. So we would have been discussing some of these things before and gone into a little bit of detail as to what each of these things would be. So you see here on your left hand side, you have your assets, and on your right hand side, you have your liabilities and owner's equity. And as I would have mentioned before, your assets have to equal to your liabilities and equity. So you see here, which is also important, we usually list the assets in order of liquidity. And what that means is that the thing that is going to be most easily converted into cash is listed first. And again, this is something that some people might just have to learn, but as you begin to understand it, you will understand the logic behind it. Cash is cash, so that will always be first. You can't, it's already cash, so there's no liquidating to, it is cash. Accounts receivable, for many persons, you have 30-day terms. So one would hope that your accounts receivable is something you could convert into cash in 30 days or less. So that will help you to understand why for many persons, accounts receivable is usually listed next on your balance sheet. Next, you have supplies. Depending on the type of business you have, your supplies or your inventory may be something that you have sitting down for longer than 30 days. So say, for instance, you paint houses. You may have an inventory of paint brushes that could last 2 or 3 months. I giving an example, I'm not a painter, so don't cuss me if paint brushes is mashed up faster than 2 to 3 months, but you get the idea. Next, you have your long-term assets, and as we get further into detail, you'll see some further subdivisions to show your short-term assets versus your long-term assets, but this is a very basic illustration at this point. You have land. Land and buildings usually would be something that should last a very long time. Your machinery and equipment would, for some persons, this could last longer than a vehicle. For other persons, the vehicle may last longer than your machinery or your equipment. Depending on what type of business you have, will show how you would list it in your balance sheet. On the right-hand side here, we have your liabilities and your owner's equity. So under liabilities, we have here your accounts payable, all the persons that you would owe money to. You have your salaries payable, because as at December 31st, you may have staff that you have not paid yet, but it does not mean you do not owe them this money. So you need to record that to show that as at December, Even though you didn't pay that staff person yet, you recognize that you still have this money to be paid. Next, you will have something like loans payable. So let's say you have borrowed money from a bank or a credit union or wherever you borrowed the funds from, you have to list it here. And under equity, David South is the person who owns Southside Cleaning Corporation. Therefore, the savings that he would have put into the business is listed here separately. But you can see the capital plus the liabilities totals to 402,500, which is the same as all of the assets added together. If these are not equal, your balance sheet is wrong. Okay? Next, we have the income statement. And again, I'm going to go through an illustration so that you will be able to understand this. But the income statement now is for a period of time. So usually you will record what would have happened within a year's time. So it's not all the revenue you would have made for the entire life of the business. If your year end ends at December, it is the revenue that you would have made from January to December. It's the expenses that you would have had from January to December. So that is the important difference between an income statement and a balance sheet. So we have here the revenue from cleaning services of $230,000. And this, as I mentioned, because you have here for the year and not as at, for the year ended December 31st, this is the amount of money that Southside Cleaning would have made from January to December, whatever year that is that you would have made this money. Same thing for the expenses. How much money did you pay in salaries and wages for the year? Your telephone and internet expenses, utilities, property taxes, this if you own the property, repairs and maintenance, which is separate. If you have, for instance, with this business, you have a lawnmower and it broke or you had to replace a part, you record that under this particular category. Insurance, because every business should have insurance. You do not want that if something goes wrong with your company, you're not covered. And I'm not saying this just because I work for an insurance company, but when you have other people's livelihoods in your hands, it's not just you that you're taking a gamble with, you're also taking a gamble with other people. So customers who come onto your property, if they hurt themselves, you should be able to have some kind of insurance that will be able to cover that. There are lots of other types of insurance. You need to also see what is best for you and not just pick up something because you see somebody else has this, that you decide to go and get it, or somebody tries to sell this to you. Does it work for your business? And that's something very important people need to understand. Don't just go and buy something regardless of what it is just because somebody else is doing it. Investigate how it works for your business. Interest and bank charges, you will see this on your bank statements. Whatever interest you would have incurred or any charges that they would have had. Advertising expenses, if you decide to advertise, whether it's through traditional media or social media. You have your office expenses, and then you have your miscellaneous expenses, which is what we usually term as something you can't categorize properly, so you just throw everything else in there. You try not to make it so big that you have legitimate expenses that can be pulled out and classified, thrown into miscellaneous expense, because you want this figure to be as small as possible. Miscellaneous expense does not help you to be able to see where your money is going. So you don't know. Let's say, for instance, the person decided to throw utilities into miscellaneous expenses. Then you can't properly analyze whether your utilities expense is going up because rates were increased, or if it was because people are using more electricity or working longer hours, so you have the utilities running for a longer time. This is where all of the analysis comes in. So this is why it's very important to classify your expenses, and in some cases even your revenue, so that you can be able to see where it is your money is going and how it is that you're earning your money. So I give this example on CBC all the time. If you're running a food establishment and you're making money from different types of meals or services, there are some businesses that will separate their food from their beverages, because then they'll be able to see if their business is staying afloat because of the sale of beverages, or if it's because of the sale of food. These kind of classifications are important so that you'll be able to know where to put future money into. So if, for instance, some people break down food even further, if you see that your burgers are making more money than your fish cakes, you will know that you either have to improve that recipe or put more emphasis on the burgers. This is where analysis of the information comes in. This is why accounting is so important and critical for your business. So we have a reminder. Let me bring this back on the screen because I want persons to be able to see this formula. We mentioned before that your assets have to equal liabilities and owner's equity. For persons who have a very an understanding of maths and equations, you will see that if you bring liabilities over to the other side, you will have that assets minus liabilities will equal to your owner's equity. There's some persons who will present their financial statements in different ways. It's the way that they decide that they would like to see the information presented. The math adds back up the same way. So if we scroll back up to this example here, if we had to take 402,500 and subtract 261,000, it's going to come out to 141,500. That's the basic math. It is how some persons like to present. But it does not change the fact that the equation has to balance. So, in wrapping up this session, I am going to leave you with some questions for you to discuss, and I am going to include the questions in the comment section of this video so that you can spend some time focusing on these questions, going back through the materials. If there's anything that you didn't understand, or if there's a question that you find difficult to wrap your head around, we can then discuss it when we start this next session next week. I am not using a website. I am using a pirated copy of BIMAP materials. So I cannot share them because I did not get permission to do so. Hopefully, when all the dust is cleared and settled, we might be able to have something more formal. But either way, you still need to go to BIMAP for any certifications, for any qualifications that you may want to have. As I said in the beginning, you cannot go to any business and say that you went to the school of Crystal Howell, you know anything about accounts, because I am not qualified to certify anybody. Still need to go to BIMAP, still need to do the CXC, or you still need to do that CAPE exam. So the questions I will leave with you: what is the nature and purpose of accounting? Why do we do accounts? Can you differentiate between accounts and bookkeeping? What types of work does an accountant perform? What is the purpose of an audit? What does an income statement disclose? Can you define revenue, expenses, net income, or net loss? Why is it important to state the period covered by an income statement? What does a balance sheet show? And just for information purposes, I have to say this because, it's a tidy thing to do. The balance sheet is now referred to by accountants as a statement of financial position. But if you say balance sheet, people will know what you're talking about. Define assets, liabilities, and owner's equity. And then the last question, what is the balance sheet equation? So, as I said, I'm going to put all of these questions in the comment section for this particular session. I hope that you guys enjoyed the session. If you did, you can give it a nice little thumbs up or some hearts or whatever it is that people give to show that they enjoyed the class. And please feel free to share with others. I know this is a very difficult time to be in, and it's difficult to focus and to teach yourself, but you don't want to come out of this situation and going back into class feeling more behind than you were before. So I am hoping that I have brought some element of normalcy in the middle of all of this panic and chaos. I hope that this helps you to be able to keep up with the studies that you have. And I hope that everybody is managing and coping with this crisis as well as we can be. Please be your brother's keeper. Please look out for each other. That's the only way that we're going to be able to get through these tough times. So have a wonderful Saturday, and I look forward to seeing you next week.